What's up, traders? Welcome to my YouTube channel and welcome to this new video. And this is all about Power 3. Some traders do not know what Power 3 mean. Even some traders in SMC space, they don't know what Power 3 mean. You can see accumulation, manipulation, distribution is a huge influence in the market. Not just maybe indices. It includes forex, it includes stocks, includes any financial markets, because these markets are controlled by people. They are controlled by the market makers, and this is their whole intention summarized in 3 words. So I'm going to go straight into the video and open your eyes. Let's go. Firstly, accumulation. When we talk about accumulation in forex, we know what accumulation means. When price is trying to consolidate, and we all know that we see this in the Asian session most times. In the Asian session, we see that prices consolidate, do not really move. Now, this is exactly when they are trying to consolidate prices and all that. Okay, manipulation is when you suddenly see a breakout out of that consolidation, and that breakout usually happens at certain times of the day. Now, it does not happen just any time. If you want to look into the London session, it happens around between 2 a.m. Eastern time to 11 a.m. Eastern time, but it always happens around 9. It always happens around 3 a.m. or 4 a.m. Eastern time. That's when you're likely to see that breakout. Now, this breakout leads lots of retail traders to stacking position in the direction of the breakout. But this is a pure manipulation, because price usually reverses with more aggression to the opposite side, which is what we call distribution. That's when prices are beginning to distribute, trying to go to where they want price to get to for that Q zone. You feel me? Now, many traders don't know about this. Many traders have not looked into this. They just come and do the analysis, and then when it gets stop hunted, they be like, why are they trying to hunt my stop loss every time? They know where majority of people have their stop losses. They know when price breaks out of a certain range, people want to buy up. They don't know that is actually them trying to lure you in. So this is the correct arrangement. Accumulation happens first, manipulation second, then distribution third. So I'm going to go straight into how this behaves when you look at the daily time frame. I'm going to use a candlestick. Now look at this candlestick carefully. Right? I made it white so that it can be very clear for you to see. See the wick up, the body, and the wick down. Now let's imagine this to be the daily time frame, because in the daily time frame it takes 1 day for a candle to completely form. So the whole accumulation, manipulation, and distribution all happens in the same candle. When you look at the candle, when you see a candle with a wick at the upside, it means that candle was once at the top of that wick. Okay, it was once at the top of that wick, but then it rejected a little and closed closed that spot, right? Like that was where price actually closed. The closing price of a bullish candle is always up. So how did it happen? And how, when you look below this candle, you're going to see a wick also. It means the candle was down there before, and then it rejected. So what does this mean? Now, for a bearish scenario, price goes up, right? Price is up. The candle starts with a dash. Get this right. The candle starts with a dash. Like when a candle is getting open in a new day, right? During the Asian session, it's like a dash. It's still forming, and that's when the accumulation is going on in the smaller time frames. the volume, everything is very low. You see the candle at the start of that day, it's actually very, 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 the range of that candle daily is very tiny. And then you see all of a sudden this candle, if it was meant to be a bearish day, this candle, like that dash, should start going bullish up very fast, up very fast. This is during the London Q zone, and then all of a sudden, when it's time for distribution, it was going up. All of a sudden, it started rejecting. While going up, you're going to leave its footprint, which is that wick you see up there, that you see an arrow pointing at. Then start rejecting, and then start turning into a bearish candle. It once opened like a dash, and that dash could be red, it could be a bearish candle, it could be a bullish candle, but it opened like a dash. And then on a bearish day, it's going to go bullish during the manipulation. It's going to go bullish up, and then if it's time for the distribution, the real move of the day, it start rejecting, and that bullish move turns to a wick, and then it has its real identity formed, downwards bearish for the day. Now this is vice versa for the bullish candle. For the bullish candle also, it starts like a dash, goes down, turns to a red candle during the manipulation time. The dash is the accumulation time, but then it goes down first in a bearish way, and when it goes down first in a bearish way, then it's a manipulation and people get involved in sales, and then it rejects, leave its footprint, and start going up, and close bullish for the day. This is all about power 3 you hear about. So I'm going to go deep into the smaller time frames and show you how this is on the charts. So let's go to the charts. So you guys should look here very carefully. You see this whole price action. You see the accumulation that happened here. Price did not have much volatility, and then watch the time the manipulation happened. I told you guys, most time this manipulation happens around 4 a.m. Eastern time. My trading view is set to UTC -5 New York, right? 4 a.m. Eastern time. You see the breakout. Now this is the breakout, and you have so many traders trying to long from here, and their stops are always underneath. They try to go long from here, targeting at least 1:2, or maybe the next high or whatever. Most times they don't get lucky. Now, some wait for the break and retest of this zone and all that, and you see how they're going to get clapped. All right, so this is what happened. So the opening price is an important factor in power 3. Power 3 is when you hear the 3, the accumulation, manipulation, and distribution. But an important part of the power 3 is what we call the opening price, the midnight opening price of the market. Every day, the market open at a certain price. So let's look for 00 hour. Here we get it, right? So if I zoom into that, we'll find out that this is a bullish candle, and then the opening is meant to be down, right? So if it's down, you have to. All right, so this is the opening price of this candle, right? Down is the opening price of this candle, okay? So as you can see, if I pinch my screen, you're going to find out that price went above this opening price for the day here before slamming down. Are you seeing it? So the opening price is when I described that the daily candle opens like a dash. And for a bearish day, during the time for manipulation, it goes up. And when it's time for distribution, it rejects and start going down. While it's turning to go down, it lifts a wick. Since it was bullish before, it lifts a wick there and start coming down. That's what just happened on this day. So look at the candle of this day. This is February 3rd on Friday. This move was NFP influenced. Well, let's see. On a normal day, the fall might not happen that precise, like that big, but come on. It happens every day.
almost like that. So I'm going to clear everywhere on my screen so I can see what I'm trying to tell you. Did you see how it went up and then it's formed like this? So now we'll look for any candle, right? So look at this. It's a bullish candle. Let's use an instance. See how it went down first before going up, and see where it closed. So this is Tuesday, 7th February. So let's go on the 15th and look at it. Which time frame do we use? We use a 1 hour, I guess. Okay, we use the 15. Let's go to the 15 and look at it. Which day was that again? Sorry. That was 7th, Tuesday. Okay. 7th, Tuesday. Let's see. 7th, Tuesday. Okay. This is 6th. This is 7th. So we'll look for the opening price. Okay. My vertical line first. And that's 00 hours. I'll mark it there. Now, since today was meant to be bullish, it has been planned. Now, look at what happened again. That's the opening price. That's a line right here. And do you see how price went down below the opening price first before going up? So in this case, the whole accumulation happened inside this range. Do you see it? Then the manipulation happened around here. The price went lower, and this is the main move for the day. This sharp move for the day. Now, I'm randomly choosing the days I'm checking on the daily time frame. I'm randomly choosing the days each and every day. Okay, even if I go to the daily time frame, let's just look at the 15 and find out that every fucking day that this shows up every fucking day. Let's just find out and see. Okay, so let's go. So this is a bearish day. You see how price fell. Let's look at where the opening price was for the day. Okay, so this is the opening price. I'm going to zoom in so I can mark where it really opened from. Okay, so right there, I'm going to use my horizontal ray and click on that. And that's it. And you see that even if price did not run up all that high, but it went above first before coming down. So the essence of this video, there are a lot of examples for you to go and check. Go to your chart, look for more examples. I see how it raced down. The truth is, most times people make mistakes with the analysis. When they come on YouTube, they watch a particular concept and they just go and put it in their live trading. Now, this is not a strategy. This is something you should observe. So if you're this kind of person and your strategy, you do not take note. Let's say you trade breakouts during the London session and all that, you have to look into why you take losses. Because there are a lot of things that happen behind the scenes in this market. A lot of things. On a day like this, I was this bullish. I can bet you the opening price was it went below the opening price first. It stayed there for a while. This is the opening price, I guess. Are you seeing it? When it did not go below, nothing happened. Are you seeing it? And then when it went below, this happened. Now, I use this power 3 method. Okay, remember, this is the accumulation, right? This is the manipulation. Sorry. This is the accumulation. This is the manipulation, and this is distribution. So we all know that I use this this concept in my trading, but for a particular purpose. And what's the purpose? I'm going to show you where I use it. Now, watch how I use it. So maybe you can apply it or whatever in your trading, but I use it very smartly. On a day when I have something like this on the 1 hour time frame, I know I have something like this on the 1 hour time frame. And then this is my break of structure. And I'm expecting price to pull back a little like this, maybe before going up. I know I have a target liquidity, which is this. Okay, I have a target liquidity, which is this. And I know price is being drawn to this because this point of interest serve as a magnet. I tell my VIP students all the time. So there are cases where there is no way I can measure the retracement that is likely to happen. Price is pretty straight, and there's no way I can hang fee by the top. I can anchor it here, but I can't anchor the up. But everything is pretty straight. What I do is I go on the 15 minutes and make sure there is no low below me. Meaning, I want to make sure there's nothing like this in 15 minutes waiting. If there's something like this waiting, I'll anticipate price to go below it first if I try to buy towards this. That's what I'll anticipate. Price to go below it first if I try to buy before this. But in a case where there is no low like this, I want price to go a little bit below opening price, give a break of structure like this, then I'll buy towards this. You might not really understand, but if you watch my SMC bootcamp, you might be able to relate around I don't know if I can get into my channel right now. Okay, let's see my channel. The video where you're likely to see good examples is how to find daily buyers. This particular video, 27 minutes, I gave lots of examples on how I find my daily buyers, and in such scenarios you find what I just said now in real life. So if I was likely to show you an example of where I use it, let's look into a live example though. Let's look into a live example if I can remember. That'll be cool. Was the day I took that trade. Okay, I'll go to 1 hour time frame. It's going to be way easier to spot it here than anywhere else. Okay. Sorry. Oops. Maybe it's a perfect example. Though this was too, just too choppy on this day, I avoided the markets, but this is exactly what I was trying to talk about. This is a target liquidity, like what I drew, and this is the breaker structure. You can go back, take the video back, and see the pattern I did so that you can be able to understand. Right? This is a pattern. This is a liquidity target, and this is the breaker structure that happened around what's this time? The breakout structure happened earlier around London session, but in New York session, how would I have traded this? That's what I'm focusing on, right? So I trade mainly at the New York session at 7 a.m. Eastern time. So as at this time, I was in the markets. Okay, so let's look at during the New York session. The opening price you should worry about is the New York Q zone open, which is the opening price of 7 a.m. This is 7 a.m. Eastern time. The opening price of it is supposed to be found here. Do you see that? It was found here. And do you see how price went slightly below it? So this is 17th January. Let's see 15 minutes how I'm going to get my entry. Let's see. 15 minutes how I'm going to get my entry. Let's see how I'm going to get my entry at 15. Okay. All right. Now this is a nice example. A very nice example. So this is the opening price. See how price went below it, Now, price went below it into this area of fair value gap. On the 1 minute time frame, after price entered this fair value gap, you would likely see a break of structure to the upside and all that. And that's where I'm going to take my bias from and aim at this major liquidity. And even if I don't look for my break of structure, entering here is more like a risk entry, but it's a good choice because the fair value gap below is very low. So this is nearest one price is likely to react from. So my stops will be around here, and that will be a good one for the session because the sales that happened later was way slower, right? So that's exactly what I was trying to say. That's the use of power three for the New York session. I have to focus on the New York time open. But if I was going to trade on the London session, I was going to focus my energy, my attention on what the 00 midnight open. I'm going to tap it. You're going to see it. And you're going to see how price went below. This is it. Opening price here below. And you see how price went below first before going up. Now, I didn't just come and start making use of power three to trade, right? There are so many things that are involved that made me to consider today as a bullish day, which is 17th January, Tuesday. There were a couple of things, from the daily time frame, 1 hour time frame, and all that, that made me believe that yes, it's going to be a bullish day. So the power three is only going to help you towards the N3. You want price to go below this and give you some other confirmation before you take a long. You don't just go and anytime price go below your power three you want to buy, you get yourself cooked. So you have to do a study and maybe incorporate it into your strategy and know how best to use it. But this is the insight I decided to give to the community. If you found this video helpful, smash the like button, turn on the notification bell, and subscribe to the channel. Until next video, see you guys.